Ever wonder what it looks like when a stock just breaks reality? Well, today, we're going to dig into one truly wild day for a company with the ticker HXXX. It went from being just another name on the screen to something that, honestly, defied all logic. So what in the world happened here?
Okay, let this number sink in for a second. 273.91%. Yeah, that's the gain this stock pulled off in a single trading day. That's the kind of return people dream about for, a decade, not a lunch break. The question isn't just what happened, but how is that even possible?
And it wasn't just the price, The trading volume just exploded. We're talking 48 times its normal daily average. So this wasn't some quiet, steady climb. Oh no, this was a full-blown stampede. A price jump like that, plus an explosion in interest, that tells you something truly extraordinary was going on. To really appreciate just how violent this move was, we have to look at the calm that came right before it. Believe me, the data from the days leading up to this event, well, it tells a completely different story. And what's so striking here is, well, how boring it all is. I mean, look at this. In the week before the spike, prices were just kind of hovering between 30 and 40 cents. And the volume, it was tiny, sometimes less than 30,000 shares traded in a whole day. This was a forgotten stock just quietly drifting along. This quote just says it all, doesn't it? The stock barely had a pulse. It was a complete drought of interest. And that contrast is exactly what makes the flood that's coming so unbelievable.
And then, bam, the flood. On Monday, December 22nd, the stock closes at $1.29. The volume? It wasn't 30,000 shares, it was over 323 million. It went from a quiet little stream to an absolute tidal wave, pretty much over a single weekend.
So, we know what happened. But how, right? How do you even measure the raw force of a move like this? Luckily, a technical report from that day gives us our first clues. It's time to put on our detective hats and sift through the evidence. So our first clue comes from an indicator called the Relative Strength Index, or RSI for short. The easiest way to think about it is like a speedometer for a stock. It doesn't just look at the price, but how fast and how hard that price has been changing. It tells us if the buying or selling is getting a little extreme. The report shows that on the day of the spike, HXXX's 14-day RSI clocked in at 76.35. Now, that number by itself might not mean a whole lot to you, but trust me, in the world of technical analysis, that is a big, flashing red light. And here's why. See, any RSI reading over 70 is generally considered overbought. It's just a technical term that means the buying has gotten way too hot, way too fast. So at 76.35, the buying pressure wasn't just strong, it was verifiably extreme. Okay, so the price moved with incredible speed. We got that. But what about that massive volume, that stampede of traders? The speedometer told us about the momentum, but our next clue, well, it follows the money itself. This brings us to the Money Flow Index, or MFI. It's kind of a cousin to the RSI, but with one huge difference. It mixes trading volume into the calculation. So it doesn't just measure the speed of the price changes, it measures the actual financial muscle behind those changes.
And this might be the most stunning number in this entire story. Get this. HXHX's MFI reading was 99.95 on a scale that goes up to 100. I mean, that is basically a perfect score. It's really hard to overstate how nuts that is.
Look, if an RSI over 70 is a red flag, an MFI over 80 is a blaring siren. A value of 99.95 is something else entirely. It means that on that day, nearly every single dollar that was traded was part of that upward push. There was basically no selling happening. This wasn't a debate between buyers and sellers. It was a one-sided stampede fueled by an incredible amount of money. So let's recap. We've got extreme speed and a near-total dominance of buying pressure. Let's put all these clues together to paint the final portrait of this chaotic day and see just how far this stock strayed from any sense of normal. Just take a look at this simple comparison. The price hit $1.29, while its average price over the previous 50 days was just under 74 cents. This wasn't just a good day. The stock launched so far beyond its own recent history, it was basically in a different solar system. All right, our final piece of evidence is a tool called Bollinger Bands.
In simple terms, these bands just create a channel around a stock's price. The upper band represents a level that's statistically high, and the lower band is statistically low. And almost all of the time, the stock's price stays somewhere inside these two bands.
And this right here, this is the final jaw-dropping piece of the puzzle. The price of HXX didn't just hit the upper band, it didn't just poke through it a little bit, it closed 150% outside of it. This isn't just unusual, it's a massive statistical anomaly. It's the technical equivalent of a car not just breaking the speed limit, but achieving escape velocity. The event was, quite literally, off the charts.
So we're left with this portrait of a statistical impossibility, a moment of extreme momentum, one-sided money flow, and a complete break from any historical norm. And it leaves us with this question you see here. When you see this much chaos, is it the start of something new, or is it just the echo of a single wild day? The data shows us exactly what happened, but only time will reveal what it truly means.